Imagine this. While global leaders argue over trade tariffs, climate policies, and supply chain disruptions, China is quietly rewriting the rules of the global economy. While the world debates, China doesn't pause. It builds, it innovates, it invests. Stay with us until the end, and you'll see why what's happening in China right now could reshape every market, industry, and investment strategy across the globe, faster than anyone imagined. Let's start with the numbers. In 2025, China invested over $1 trillion in advanced infrastructure, renewable energy, AI, and manufacturing technology. To put that into perspective, that's larger than the GDP of most European countries. While countries across the West debate stimulus packages and trade balances, China is spending like tomorrow depends on it, because in their eyes, it does. Take China's rail network, for example. While most of the world still argues about bullet trains and high-speed rail corridors, China opened a 400-mile-per-hour vacuum Hyperloop test track this year, a train that could take you from Beijing to Shanghai in under an hour. Yes, you heard that right, under 1 hour. Engineers are already planning routes that will eventually connect the entire eastern seaboard, making long-distance domestic flights nearly obsolete. Meanwhile, in electric vehicles, China isn't just producing EVs. They dominate. Companies like BYD and NIO don't just compete domestically, they're reshaping the global automotive supply chain. In 2024 alone, China exported more electric vehicles than all European countries combined, and their production capacity continues to grow at double-digit rates every year. But it isn't just about manufacturing, it's financial strategy. China has quietly built the largest national industrial investment engine the world has ever seen. From low-interest loans for key industries, to state-backed equity injections, to direct procurement contracts, the government is orchestrating a system where innovation, production, and finance all move in perfect synchronization. Consider solar energy. The Gyeonggi Talatan Solar Park in Qinghai Province is the largest in the world. Alone, it could power the entire country of Norway. But zoom out and you see a network of deserts and provinces dotted with wind and solar farms, all producing clean energy at costs that the West struggles to match. In 2024, China added 244 gigawatts of renewable energy capacity in just 5 months, more than most countries add in a decade. That isn't incremental growth, that's a revolution. By now you might be wondering, how is this possible? How is China moving so fast while other nations debate regulations, subsidies, and tariffs? The answer lies in a system built over decades. It starts with strategic vision. From Deng Xiaoping's Reform and Opening Up to Xi Jinping's Made in China 2025, China has consistently set multi-decade industrial strategies. Unlike Western economies that react to quarterly earnings or political cycles, China plans in 5, 10, even 30-year increments. That long-term vision allows them to allocate resources in advance, absorb risks, and dominate emerging markets before competitors even know what hit them. Take electric batteries, for example. In the 1990s, a young entrepreneur named Wang Chuanfu founded a small battery company called Yadi Electronics in Shenzhen. Fast forward to today, that company, now BYD, is producing lithium-ion batteries at a scale the world didn't believe possible 20 years ago. Battery production, electric cars, renewable energy. China controls the supply chain from raw materials to finished product. Meanwhile, other countries are still importing, waiting, and negotiating. And while this is happening, global investors are only slowly waking up. Many still debate whether China's growth is sustainable, whether debt levels are too high, whether real estate bubbles or trade tensions will derail the momentum. Yet China continues to move forward, faster than anyone predicts, while the world argues in slow motion. Here's something that may surprise you. In artificial intelligence and automation, China is moving faster than most people realize. Factories now employ humanoid robots capable of assembly, quality control, and logistics management. In 2025, over 500 robots from the UB Walker S2 series were clocking in across major Chinese factories. performing tasks that once required hundreds of human workers. These aren't prototypes. They are fully operational, working shifts and learning as they go, improving efficiency and cutting costs in real time. And it doesn't stop at factories. Drone swarms, flying taxis, AI-controlled supply chains, even brain-computer interface research, all of it is happening simultaneously, at scale, and under government coordination. While Silicon Valley debates AI ethics, China deploys AI in cities, hospitals, and infrastructure projects, building practical applications that reshape everyday life and commerce. By the way, if you're finding this fascinating and want to stay ahead of these trends, hit that like button, subscribe to the channel, and join the discussion in the comments, because the strategies I'm about to share could directly impact your investments and financial future. Let's talk about strategic market dominance. China doesn't just produce more EVs, solar panels, or robots. It produces them cheaper and faster. Why? State-backed finance, bulk procurement, preferential land deals, low-cost labor, and centralized planning. In 2023, China produced 861 gigawatts of solar panels, yet global demand was less than half that. Prices fell, competitors struggled, but China's factories kept running. That's overcapacity, yes, but it's also strategic dominance, shaping global markets before anyone else can react. Look at lithium and battery metals. China controls over 60% of global lithium-ion production and refining capacity, while also securing long-term contracts in Australia, Africa, and South America. That means every EV and grid storage battery sold anywhere in the world relies on Chinese supply chains, giving China enormous leverage in both pricing and innovation. And here's the part most people miss. This isn't just about China winning in one sector. It's an ecosystem. Renewable energy, electric vehicles, AI, quantum computing, robotics, all of it interconnected. China's industrial and technological policies create synergies, where advancements in one sector accelerate progress in others. For example, quantum computing accelerates AI development. AI improves robotics efficiency. Robotics improves manufacturing output, and manufacturing feeds the supply chain for EVs and energy storage. Now think about the implications for the global economy. Investors, governments, and corporations who ignore China's pace may find themselves scrambling. Stock markets might be distracted by inflation or interest rates, but supply chains, technology adoption, and industrial dominance are shifting dramatically. By the end of this video, you'll understand why missing this trend could cost trillions, and why positioning yourself early could be one of the most important financial decisions of the decade. Let's break down 3 key areas where China is winning the financial race right now. 1. Industrial capacity. China produces more than it consumes. Factories run at full tilt, and output exceeds domestic demand, creating a massive trade surplus. This surplus allows China to influence global markets while keeping production costs low. It's a strategy rarely seen in Western economies, which often rely on consumption rather than production as a growth driver. 2. Technological leadership. From AI to robotics, China invests heavily in R&D. The government spends billions annually to ensure the country leads in next-generation tech. The UB Walker S2 robots, the Beinow brain-computer interface, flying taxis, these aren't just innovations, they're early adoption strategies that create new markets and redefine existing ones. 3. Strategic financing. Low-interest loans, state-backed equity, preferential procurement, and subsidies allow Chinese companies to scale faster than global competitors. Tesla and other Western EV makers may receive tax credits, but China's financial ecosystem integrates innovation, production, and market deployment seamlessly. It's a system designed for speed and dominance. Here's where it gets even more interesting. While the world debates tariffs, subsidies, and protectionist policies, China is quietly building economic resilience. Their domestic market is massive, their industrial output is unmatched, and their technology adoption is accelerating. The debate over fair trade or currency manipulation is essentially irrelevant, because China already has the infrastructure, the capital, and the production capabilities to dominate. Let's move to renewable energy, another area where China is transforming the market. The East Artificial Sun Reactor reached temperatures 6 times hotter than the sun's core. Fusion research in China isn't a distant experiment. It's a proof of concept for unlimited clean energy, and it's moving faster than anyone else globally. Combine that with over 60% of global solar panel production and dominance in wind turbines, and you see a country not just producing energy, but controlling the future energy economy. But China's strategy isn't just physical infrastructure. It's financial and digital infrastructure too. Mobile payments, digital wallets, and AI-driven financial platforms are now fully integrated into daily life. By creating a cashless, automated, and highly efficient system, China reduces transaction costs, increases economic velocity, and conditions consumers for digital adoption, all while gathering invaluable economic data. By now, you're probably wondering, where does this leave investors in businesses outside China? The key takeaway is simple. Scale, speed, and integration matter more than incremental debates. Companies that adapt early, invest in supply chains, and align with emerging Chinese technologies will benefit. Those who wait for clarity or regulatory certainty risk being left behind. And here's the kicker. This isn't just about economics. It's about influence. Controlling supply chains, energy, technology, and infrastructure gives China a leverage unmatched in modern history. By the end of this decade, every strategic decision, from EV adoption, AI deployment, to energy transition, will be shaped by the pace China sets today. Now, if you want to stay ahead and position yourself to benefit from these shifts, make sure you like this video and subscribe. We break down the strategies, investments, and global trends that are shaping the next 10 years. Before we wrap up, let's zoom out. Look at the bigger picture. While Western economies debate inflation, interest rates, and trade policy, China is building a future where technology, finance, and industry are integrated into one unstoppable engine. Renewable energy, EVs, robotics, AI, fusion power, it's all connected. It's all moving fast, and the pace, it's shocking. So what does this mean for the world? For investors? For anyone trying to plan for the next decade? It means one thing. Watch where China is investing, what industries they are building, and which companies are aligned with their strategy. Because the future isn't coming, it's being built, brick by brick, machine by machine, dollar by dollar, right now. By the time you finish this video, you'll understand exactly why global debates matter far less than China's execution, and why positioning yourself wisely now could make the difference between losing ground and gaining a generational advantage. Remember, the world will argue, China will build, and the consequences will ripple across every market, every industry, and every economy. If this opened your eyes, don't forget to subscribe and hit the notification bell, because we'll continue breaking down the financial moves, industrial strategies, and investments that are shaping the future. The world is debating, China is building, and it's only going faster from here.